Hey guys, welcome back to Snowball Investing. This is going to be the March 2023 portfolio update. Before I begin, I just want to thank everybody for liking my previous video. I got a bunch of new subscribers and it was one of my better performing videos to date. When I started this channel, I didn't even think I was going to get 20 subscribers, let alone nearly 200. I know it's not a lot when compared to some of the other channels out there, but I appreciate everybody's support. And without further ado, let's jump into the stocks and shares ISA. The stocks and shares ISA sits at £35,407 and it is down by 4,192. Looking at the monthly chart, it's been a fairly volatile month. You can see the low was around 33,000 just before the Palantir earnings. Obviously, the Palantir earnings came out, which I'll touch on in a little bit, and the value of the portfolio jumped up to 39,000. And it's been sort of downtrending ever since and now sits at a value of just around 35,000. Looking at the performance in the last month of the ISA compared to the FTSE All-World ETF, the ISA is slightly underperforming at minus 4.29% and the FTSE All-World is down by 2.73%. So as we do in all of our videos, I'm going to start off with Palantir because that's my biggest position. So the value for this now sits at £14,627 and the position is down by minus 13.84%. So Palantir was actually in the green post earnings, up a couple of percent, which is very exciting, although as you can see, didn't last long. However, I'm quite confident with my current cost basis, which is around $10. I think when we have a bull market, which we are going to have eventually, when there's enthusiasm in the market, I think I'm going to do quite well with this if the company continues to perform as they have done. The biggest news from Palantir earnings was Palantir was finally GAAP profitable, which is very exciting as an investor. And obviously the share price jumped up quite a bit after this news. Although there was a bit of jiggery-pokery done with the numbers, Palantir's core business isn't quite GAAP profitable, although it's quite close and heading in the right direction. There was a bit of an accounting adjustment, although overall I think it's a positive when it comes to Palantir earnings. So just to touch on a few of the Q4 highlights, and as a caveat, I am by no means an expert when it comes to analyzing earnings or understanding the company's financial position or performance, although there are a few key metrics I look at when it comes to specifically Palantir. The first thing to touch on is revenue growth. So the total revenue growth was 18% year over year to 509 million. This is a bit of a far cry from the 30% that was promised, although given the current macroeconomic conditions, given this is a discretionary product, I'm willing to give just a little bit of slack in terms of the revenue growth, although I'm going to keep a very close eye on this in the next couple of earnings to make sure we are having that consistent growth quarter over quarter. So the other thing I look at, which is I think more important than revenue growth, is customer count growth. So customer count grew 55% year over year and US commercial count grew 79% year over year. And that is probably why I have the conviction in the stock I do have. Normally Palantir don't get a lot of those earnings up front when they onboard a customer. Sometimes customers may only start with a pilot, but the expectation is when they realize how good Palantir is as a product, they increase their spending over time, and Palantir can be quite sticky. So I'm very happy with those numbers. Next up, we have the FTSE All-World ETF, which is up by 2.72%. I've not been buying any index funds in this account, but instead been buying the S&P 500 in my Vanguard investment account. SoFi is down by 6.84% and is one of the few positions in this portfolio which I have been actively buying in the past month. Nasdaq is down by 10.12%. Meta's been holding up quite well since its jump up in share price, and you can see on Friday it was up by 6.14%, which is quite impressive. Microsoft is down by 1.57%. Tesla is down nearly 10%. It did take a bit of a hit post Investor Day, which I didn't follow too closely, but from what I heard, it was quite disappointing and quite boring. We have Alphabet down by nearly 19%. Next up, we have PayPal, which is down 24%. I did nibble on PayPal just a little bit more. DraftKings performing quite well in a month, up 20% overall. We have AMD, which is down 7%. SO Capital still in the green by a fair bit, by 50%, sitting at nearly £400. We have Boohoo at minus 41%, although in the last month it is up by a sort of decent 24%, but I'm still a long way from being break even on this position. Nvidia is up by a massive 51%, which is obviously nice to see. That was mainly due to earnings, and as you can see from the chart here, just before earnings it was sitting about $207 and it jumped all the way up to $238, so I had a pretty decent earnings. And given the hype around AI and lots of mention to AI in the press release and the earnings, I'm not surprised there's a bit of enthusiasm with this stock. Just a quick look at some of the other positions. Ginkgo Bioworks, I've been dollar cost averaging every single month into this to kind of bring that average price down, but it is down by minus 35%. Cleveland Cliffs doing quite well, that up 53%. Apple up 4%. Intel not doing quite well, that's at minus 33%. ChargePoint up 3%, and I've been slowly buying a bit more of that. And there's some other smaller positions as you can see on the screen here. So that concludes the stock and shares ISA. I wasn't buying too heavily since the new year as things shot up quite quickly. Although now there's been a downtrend in the market, I've been dollar cost averaging in and being a bit more consistent with my buying. Moving over to the general investment account, this sits at £10,841 and the overall portfolio is down by £458. Comparing the GIA to the FTSE All ETF, GIA is down by minus 5.53%, which is actually worse than my ISA. Again, the FTSE All ETF is down by 2.73%. Looking at the individual positions in the GIA, let's start off with Alphabet, which is the biggest holding. So this is down by 14.23% and actually had a pretty bad month because it is down around 12% on the month. Some of that is probably due to the competition they have with Microsoft and Bing with ChatGPT. I expect that to have some short to medium term ramifications in terms of Alphabet's performance and share price. However, I think long term Alphabet will react to this. I don't think they'll take it lying down. I think they'll adapt, make the relevant changes, and as a long term position, which is to me 10 to 20 years, I'm comfortable holding this position and actually increasing this position given the drop in share price. Given the lower cost price of Meta in this portfolio, this position here is up 22%. Starbucks still performing well at plus 36%. Microsoft is nearly break even and this position is £586. Intel still down 21%, although I did get a respectable dividend from this, which was around £6.06. Oatly down 24%. Amazon down 7% and JP Morgan up 23%. NEO, probably the worst performing stock in this portfolio, down 51%. That concludes the free trade GIA, so let's move on to the Vanguard investment account. As I mentioned in my previous video, I've started a Vanguard account where I invest £1,500 every single month into the S&P 500, and that's regardless if the market's up or down. So this position now sits at £8,764 and the position's up by £265. The new financial year is just around the corner, so my expectation is to inject another £1,500 into this account for March, and then starting from next month I will start investing in my free trade stocks and shares ISA. The rationale behind that is the stocks and shares ISA is your tax efficient wrapper, so if I can utilize that I will. If I have any additional cash per month, I will use this Vanguard account to invest in the S&P 500 and try and make this into quite a sizable position going forward. So that concludes the March portfolio update. If you've got any comments, drop them down in the comment section below and I'll catch you in the next video.